Action. How's everybody doing? Happy Thursday. Hope everyone's having a great summer. It's been pretty hot out there, some volatile weather, thunderstorms here and there. But we have an exciting topic today. We're going to go over the last topic of the Big Beautiful Bill in our three-part series. So we covered a lot already. We're just kind of giving you the meat and potatoes of the bill. So before we get into it, just quick introduction. We've seen a lot of you here before. My name's Robert O'Keefe. I'm the creator and founder of Over 55 NJ. I'm a Monmouth County-based real estate broker, and we love helping seniors make long-term game plans for their relocation. We love connecting with you. We love setting you up with searches and answering all your questions on the community. I'll just give you a quick story. We were helping someone who wanted to have her adult son stay with her in the community. So we actually did the research. We're narrowing down communities. And we read an article online. It's kind of interesting. A lot of these communities are kind of like navigating a maze on the rules and things and regulations, and something like that is not just regularly available online. So if you have a specific condition like that, if you have a specific preference, that's another exciting thing about our niche here is everybody's different and everybody has different things that are important to them. We implore you to reach out so we can start planning ahead for these things. Our company motto is great real estate planning is done in advance. So it's never too early to get in touch and just let us know what you're thinking so we can start making this plan with you. We're a no pressure company, so we'll always go at your convenience, no rush. So today, the topic is going to be the final topic of the big, beautiful bill, the one big, beautiful bill that just passed and what it means for you. As we said, we're not politically affiliated. We're an apolitical organization. And this is not tax or legal advice. So always get the correct tax advice, financial advice from the correct professionals. Our content is for entertainment purposes only. So now that that's out of the way, we were talking about some things that were in the bill that could benefit you. One was the tax deductions, $6,000 per married couple, $3,000 per individual. That will give you some tax breaks back. We talked about the MAGA baby accounts, a great estate planning tool. Today, we're going to talk about the final estate planning tools and the legacies and the legacy building aspect of this and what this means for you. So some will be some old material. Some will be some strategies that were previously not in the bill either, but just give you some ideas on what we've seen and what's helped a lot of families that we work with. Again, that's kind of like our benefit and specialty when we specialize in a niche like this. We talk to a lot of people. We're the boots on the ground. So we can really have some unique insight of what works for people, what doesn't work, and kind of give you that knowledge firsthand. So again, don't hesitate to reach out. And if you want to set up yourself with some searches and kind of see what the inventory is like, go to over55nj.homes and you can search all the 55 plus communities right there on your computer or your phone. So let's go into like one of my favorite topics. I think I get this from my father, who's really into finances, and grandfather as well as estate planning. So I kind of like grew up with this stuff where my father was just very considerate of me to like bring me in on a lot of these conversations, just kind of explain to me what he was doing. So I've always kind of had a keen interest in it, and I've always loved like the financial planning, investing, and stuff like that. It's kind of like was like born into it for me. I was very lucky. Um, so with the estate planning, so the biggest thing in the bill that was changed is the estate tax. The federal estate tax is eliminated. Now, these are for pretty sizable states here. We're going to talk about the individual state rules in a moment. But previously, your estate had a $13.6 million threshold for the estate tax limit. So, in other words, if your estate was over 13.6 million, let's say it's 15 million, 20 million, there would have been federal estate tax owed. This bill just kind of simplifies it, and it just eliminates the federal tax debt, federal death tax or estate tax entirely. So really kind of like simplifies everything. Now, I know what you're thinking. Your estate may not be that big, it may be that big, but this just really simplifies a lot of things in the whole process for a lot of people. So just one big less thing to worry about. Now, what we want to say too is every state is different. And this is why we absolutely recommend talking to an estate attorney professional. We're happy to give some referrals if you want to reach out to us. We have a lot of people in our network that could really help. So every state is different and every state has their own different rules. Just listening to a podcast, Sam Altman was on it from ChatGPT. and he was talking about like the dangers sometimes of AI, and just basically that it has to be regulated in some capacity. And he was thinking the best way to do it is on a federal level because every state's different, and it would just be very confusing just to go state by state and regulate this new technology that we all have access to. Now, um, the state tax is a little bit differently, where you very much have to know the rules of your state, and you really definitely want to be planning ahead for this. In New Jersey, for example, there's just generally no inheritance tax, but there is a tax, and there will be tax liability incurred if you left your money and left certain assets to different people. Maybe it's a nephew, maybe it's a niece. Generally speaking, it's just not the immediate family members in New Jersey that you could probably incur a tax liability on. And every state's different. New York has an estate tax threshold. Some of them have limits. Some of them, we have people all over the country. We had someone reach out to us from Colorado that wanted to join our group. So we implore you just to double check and do your homework on your state's rules and kind of like plan it out. Get a Google Doc open, get like a notepad open on your phone or a piece of paper if you're old school like me and like writing things down, and just write down like how you kind of want your estate to look, and like how you want it to be split up. It may be simple where you just leave it to one person, two people. You may want certain people to get certain things, but on the other side of the coin with that is you want to make sure that you're examining the tax liability with your state. But the good thing was with the bill, with the big beautiful bill, that whole federal estate tax, the death tax, is eliminated and no more. So it's pretty exciting there, and we're very excited to talk about that. Now, the next thing is the gift tax exemption. Now, this is also very exciting. So, previously, you had a gift tax limit of up to $17,000. So, the easiest way for me to explain this is to give an example. So, let's say I want to give some money to my grandson every year. I would have up to $19,000 limit before I would pay tax on the amount. So, I would want to stay under that limit to avoid paying a very hefty tax. I think it's like 30%, pretty substantial, maybe 35%. You'll have to just double check that. But though that being said, I don't want to pay for anything. Like, let's say if I want, he was asking for money, if I wanted to give him a $25,000, $30,000 check, well, I'd be taxed on the balance of that. So with the big beautiful bill and what went into place in effect is this gift taxes limit. I believe it was previously 17 or 18,000 last year, and this year it goes up to 19,000 with inflation. So what this means for you is when you're planning out your estate, you have up to a $19,000 allowance per year to give to certain people. So grandchildren and family members love this. So if you it's a great way to just kind of give back without penalty. And if you're thinking of someone that needs help down the line, it's kind of the safest and cleanest way to do that, to start planning this now and start siphoning off money from your estate sooner. And again, the limit is $19,000. If you're in a state with some limits on penalties limits for your estate tax, you may want to start this practice early. Start putting a plan together in place and start thinking like, hey, what can I give every year? What my allowance is. If the money is just kind of sitting there anyway, what could I give and what could I do? And what's cool is it doesn't have to be 19,000, even $1,000, $2,000 is a huge win for our family members, and they certainly appreciate it. So, kind of like an interesting thing. And what we'll go into the next one. This is a perfect lead into our next topic: is how to give this money and what are some of the vehicles. Now, in the first two topics, we talked about the Trump MAGA baby accounts. So this is pretty exciting. This is for babies that were born between 2025 and 2028, and pretty much every baby starts with $1,000 in their bank account, gifted to them by the federal government. And then family members have up to a $5,000 allowance to put into this account. And it sort of works like a trust account. At 18, when the child reaches 18 years, they can draw a certain percentage of it without penalty. And then it goes up from there. And then at 30, once they reach age 30, they can withdraw without penalty. I believe at age 25, we have this in the previous presentation, you could withdraw it for certain expenses, like let's say if they wanted to start a business for school purposes, things of that nature. But once you get to age 30, you can withdraw without penalty, and family members can each contribute $5,000 a year. So What a great way of doing that. What a great way of staying under your gift tax exemption limit. If you put $5,000 into that, maybe you would just give a check. That's kind of a simple way of doing it too. If you want to give a check to a family member, then just put $5,000 into the MAGA baby account. And what we said in the first time is you could be that grandparent or family member that sets up the account for the child. And they'll always remember it. I told the story about my grandparents who set me up with my first bank account. Still remember it. It's called Mula Mula at the Citizens Bank, kind of like a kid's bank account. I'm not even sure if it's around anymore. But that memory sears into my mind, and they just kind of got me started on financial planning, learning about money. And it was just a cool memory, just beyond the dollars and cents there. So, just some ideas there that you can just really research this and just bring it to the table. We recommend like bringing a memo. Let's say taking someone out to lunch, bringing a memo of just things like you're discussing, so they can read it, they can take it home with them. So it's a nice kind of like an intrusive way to just talk about this stuff, and people want to learn. Like young people want to learn these days, so it's really a beautiful thing. So how this kind of like coincides and just kind of blends in with the gift tax exemption is you could just siphon off different parts of your estate through different vehicles. So, for example, if you wanted to do $5,000 for the Trump account, that's more than fine. If you wanted to start a trust account, that's kind of like a more customizable basis. We do think those are good too. But it's a matter of just getting an attorney and drawing up a trust agreement and then opening up your trust bank accounts. And then you could put the remaining in a trust. You could simply write a check. That's another good one. Or one of our favorites as well is the 529 plan. You can go to Vanguard, or I believe Charles Schwab has them too, and set up a 529 plan. And that's basically a college savings fund where you can use the expenses for college expenses. You set it up early, you watch that account grow, and then there's money for when it comes for the child to come to college. So there's a lot of ways to mix and match this here, and just basically the government. It's a good thing from that standpoint. The government has these rules out here for everybody. There's no income limits whatsoever, and anybody can start kind of estate planning on like an individual basis. So, kind of a positive thing. And despite the media spin, it's for everybody. So everyone really benefits here. Now, um, now that the federal debt tax may appear, we want to talk about some other strategies. One of our favorites is downsizing. So I was speaking to a gentleman today. He had the whole thing planned out. He kept using the word goals. He was like really a perfect fit for our program. And what's typical with this person, he's a year or two out. A lot of people reach out to us probably a year or two of advance of a move when they're just starting to do their research, have a ton of equity in their home, and just trying to figure out what everything costs. So for him, and we went into this previously in the call, is because he's an owner occupant of that property, he has up to a $500,000 exemption as a married person for his capital gains tax. So for someone like him, he could easily resell, cut down his expenses, be debt free, not have a mortgage, and really just like have money to invest and left have money to invest either to put in these gift taxing vehicles or other vehicles. So you want to be thinking about this too. If you're concerned about Medicaid and if you have some long term care needs, Medicaid is going to be tracked more often. We went over this in the previous call. They look into this every 6 months now, per the law. There's been a lot of fraud with Medicaid. So there's going to be also certain limits, I believe, up to a $1 million equity in your home starting in 2028, which is a lot of homes these days in New Jersey. The housing market's very expensive. So it's something to look into and something to plan ahead for. And we're always here for you if you want to consult on that and just talk about some strategies there with downsizing. But we always say go at your own limit. Kind of start ahead of time. It just makes sense to just get ahead of the game here. We see people all the time whose age and health deteriorate rapidly, so you kind of want to get ahead of the game in any event and at least start like talking about it, at least start doing research on some options, and you'll know when it's time. We never pry and we never push, but you'll know when it's time once you do enough research, once you consult with us, and you'll know when it's time to make that move. And it's different for everybody. Some people want to go right away. Some people go 2 years. Some people go 3 to 4 years. Sometimes it's pretty common just to think about it and take a break and then just come back in a year or two. So we have options for everybody, and we encourage you to get in touch. Now, some helpful strategies there. If you want to get a cheat sheet of just some things we recommend, just write copy in the comments or send us a direct message, and we'll start taking some questions here, and we'll get you off a little early today. I'll try to leave not. How can moving to a smaller home or a 55 plus community help seniors fight inflation? Well, it just really minimizes your monthly bills. I wouldn't say it really fights inflation. I mean, inflation makes things more expensive for everybody, but it really just helps your monthly cost. And if you look at your finances on a monthly basis, some people I recommend like paying bills every week. It just kind of like minimizes the blow, if you will. But without that, a lot of times we help people buy and just buy their properties outright without a mortgage. So that's a game changer, just not having a mortgage on your property. Absolute game changer. So think about all the money you have back. Think about the lesser utility bills. Think about the less, I said that utility expenses, maintenance bills, but it just could really just add up, especially with the mortgage and especially with the lower bills. We were talking with consulting with the same person today, and he's saying, "Well, I would have money left over to invest as well." So could really just be a game changer a lot of times financially for a lot of people, and you'll be surprised how much your home is worth. We're happy to give you an opinion there too, if you're ever curious. Why might someone use a trust instead of giving money or property as a gift? Trusts are better legal protections in a lot of cases. Sometimes they help in the event of a divorce, in the event of something catastrophic happen. So gifts, like there's just straight checks, are going to go straight into your bank account. Trusts, you have a little bit more legal protection. You can also set up certain parameters and rules. So, for example, if the child's 25, they may get a certain percentage. They're just kind of like parameters in place and rules and protections. So, it's a great question. And pretty much you with a trust you're able to set up your own rules and you're able to safeguard the funds better than an individual gift that goes straight into a checking account and into the whole pile. What if just one spouse is over 65? Can they get the full tax break in the big beautiful bill if they're filing jointly? This is a great question. I think this was last week. So, under the proposal, if just one spouse is over 65 and not 55, you file jointly, you will get an additional $6,000 tax deduction. If both of you were over 65, the deduction would be 12,000. So it's a big extra deduction there. I actually want to double check that. I believe the individual deduction is only $3,000. Wow, we were actually just looking this up before the call, but I believe you would qualify for both if you're filing jointly. But we'll have to look into that. Let's see. Kim says this is an extra deduction on top of the standard deduction. It would be available until 2028. I want to get the right answer. That sounds right, but let's just double check that. What are some of the risks of waiting too long to plan your estate? Oh boy, yeah, what a loaded question. Yeah, there's just no right time to do it. Um, Things can get away from you. Your health could deteriorate. You really want to be planning as soon as possible. You definitely want a will in place. You definitely want to talk to an estate planning attorney. You definitely want to get set up and start educating your family members where things are in your house. Sometimes I hear people they just don't have a plan or guidelines for when they pass away. I've heard just heartbreaking stories of people trying to crack the code to a safe. Imagine doing that through grief and whatnot. So we're actually working on some kind of some like kind of like how do I say it, like I guess like products, if you will, for you guys, or resources where um, you can basically leave like a roadmap for yourself and your family members on what your passwords are, where your money's located. So kind of like a map. So beyond the will, where it just says, okay, this person gets this money's divvied up here. There's actually a map and everything's consolidated in one place. So that should launch hopefully later in the year. We've been working on that, but the risks are like things can get away, time gets away. Sometimes it's too late. Sometimes we've seen cases where someone gets sick and it's just too late to start playing these things. They don't happen overnight. So there's just like a lot of risk going on there, and you just want to make sure everything's buttoned up and planned ahead of time. And was listening to a great podcast, Brian Buffini, and he was saying that once it's done, it's done. So you never really have to think about it too much again. And man, you'll be so happy just to put this out of your mind and just have this done. You only have to do it once. How does the repeal of the federal estate tax affect small business owners or property owners? Well, for people with larger estates, they could be saving a huge amount of money on the federal basis, but you would just have to watch out on your state basis. But on the federal basis, it's an absolute game changer because all those estates are going to go through tax free on a federal basis. Mhm. Good questions today. What types of support might caregivers need under the new healthcare landscape? My caregivers need. That's kind of an interesting question. What types of support might caregivers need under the new healthcare landscape? Support in which way? I wouldn't know how to answer that question. Support, financial support. I mean, I guess there would be more money just with the gift tax, with the kind of like some of the tax exemptions where you could afford a little more. Let me see if this is for the Medicaid. What types of support? This is one we'll have to come back on. Could probably be its own video, actually. All right. Any other questions? What is the current federal estate tax exemption threshold in the United States? I believe it is $13.6 million. So, $13.6 million. It was, but now it's not. Now it's eliminated. All right. Last question. That was good. All right. So, again, thanks so much for watching. We really appreciate it as always. Feel free to get in touch anytime. Send us a direct message. We really appreciate you. We really appreciate your feedback and your questions. If you want another series like this, or if you want a different format, feel free to reach out. We very much make these videos with you in mind and your feedback. So feel free to go online if you want to schedule a call. It's over55nj.chat, and you can schedule a time to speak with us. Our email is over55nj@gmail.com. And if you want to search all the 55 plus community homes, even if you don't want a 55 plus community home, if you want a single level home, maybe not in an HOA community or anywhere else, you can just go to over55nj.homes. That will take us to our main site. Well, the over 55nj homes will take you to 55 plus listings, but we have all the listings on our website. This is a more specific one for 55 plus. So make it a great day. Thanks again for watching. We really, really appreciate it. Have a great rest of your summer, and we'll see you again next week.